Hello everyone, welcome to another episode of Market Bites. Hope you're all doing well. Like, share, subscribe, give us a rating if you like as well. We're obviously going to talk about Nvidia today, the big one, the one we've all been waiting for. But before we get into all that, Josh, how you doing?
I'm very good, Sam. I'm very good. How are you, mate? Just back from a bit of annual leave, I think, wasn't it?
That's right, yeah. A lot of tennis, a lot of golf. Watched the Arsenal. It was a good week. Thanks for stepping in on the Daily Voice. Markets were a little bit up, a little bit down. Jackson Hole saved them, but crypto had a little bit of a wobble. But it seems like, everyone's just waiting for this day now, aren't they?
Yeah, I mean, it was a bit of the Jackson one was a weird one, right? Because it was like the last thing of the week, and it was kind of riding on it. Investors kind of a bit risk off during the week. I felt like a real bad omen for markets on the Daily Voice, just coming in every day, being like, "So, guys, markets were down again overnight."
Yeah, I leave, markets are all-time highs, come back and they're not quite, but it's the big one today, Nvidia. But there's also been some big news elsewhere, which I'm sure you saw last night or last morning, whatever it is, in different parts of the world for everyone. Kelsey and Taylor Swift getting married, getting engaged, massive news. I wonder if there's a trade there. Like, is there any public companies that have associations with weddings and construction and all of these? Everyone's going to be getting married now, aren't they?
Yeah, I mean, it feels like the thing to probably do now, isn't it? I'm sure everyone will be screaming out for a ring. So anyone that's listening to this that hasn't proposed to their girlfriend yet, be prepared.
Yeah, it's coming. It is coming, whether you like it or not. I had a bit of an omen myself this morning. I was up early, went to the gym, did Daily Voice, went to the gym, played tennis, and then as I was walking back to the car, a bird pooed on me, which means good luck, right? Apparently, this is what I'm hearing. So we're going to hopefully get a little bit of good luck with the Nvidia announcement later. It does feel massive, as always. It's the last big one of earnings season. You have to go back a few weeks actually to the last sort of magnificent 7 earnings. And if we just sort of set the scene, Josh, how's it been trading this year so far?
Yeah, I think you make a really key point in terms of like it's just so big, right? I mean, in the same way that if we think back years, how Apple sort of symbolized that smartphone era, Nvidia is now defining this sort of AI era, right? It's the heartbeat of the market, makes up around 8% of the S&P 500 now, which is the single largest sort of weighting in history. Market cap eclipses the FTSE 100, the ASX 200, almost both of those indexes combined, by the way, I think is only a few $1 billion difference. And it's even larger than the whole entire crypto market as well. So I think it just underscores how outsized its role has sort of become in global markets. And I think that sheer size really underscores, I think, why we point to this, date so much on the calendar now, almost as vital to markets and investors as economic data, central bank data, right? Because of the way it can move markets. This doesn't just have an effect on, its shares, the tech sector. It has a, effect on the broader market. Whether you own Nvidia shares or not, its result is likely probably going to impact your portfolio in some way, within the next 48 hours. So, that's I think that's setting the scene right there in terms of these earnings sort of coming through. And in terms of how it's traded, shares are up 35% year to date. Pretty solid numbers when we think about what it's done, in recent years. 51% in the last 6 months alone, just has kept moving higher since those April lows. And around those April lows, we saw it trade below $100 a share. Going out on a whim here, but I don't think we'll unlikely see the stock ever trade that low again, in my opinion, right? This is just an absolute force. And the reason that we've come back so quickly and why the shares are up, 51% in the last 6 months was because fundamentally there was no reason for it to sort of sell off as much as it did around that sort of period. Again, it was a bit of a overreaction from the market, as we've come to sort of see from that sort of tariff announcement from Liberation Day, etc. And obviously, prior to that, maybe if we go back to sort of the start of the year and maybe the end of last year, we had a bit of weakness already going into those April lows anyway from, your DeepSeek and those types of things. But in the way that it's just sort of rallied back, it's just been up only, to be honest, ever since that time. Again, maybe a couple of days where it hasn't, seen that, but its numbers, that it delivered last quarter as well, just sort of justified that. But yeah, what a beast of a company, and what Jensen Huang and his team are doing. They've made millionaires out of the
Yeah.
employees. Just what they've done is just, magnificent.
Yeah, it's been relentless, and I can't quite remember the stat, but isn't it something like 50% are multi-millionaires or something like that, or
Yeah.
50% are millionaires, and then maybe a little bit less than that are multi-millionaires? Incredible company, been relentless. I mentioned on the market bites before, but for anyone that's sort of new to joining us, it always makes me laugh when I look back, because my brother has a few stocks. He works in M&A, but comes to me for a lot of these sort of what stocks are you liking at the moment, this, that, and the other. And I feel okay telling my brother these kind of things. But anyway, he did something on his own where he'd been riding Tesla for a number of years, and sold, it would have been beginning of Jan. Incredible trade, did fantastic. And anyone who remembers Tesla from the election to January had a phenomenal run, actually. So we sold that, let's just say, on the Friday, and then immediately bought Nvidia, and then on the Monday it dropped 20% with DeepSeek. I just thought, how was your luck? Like, you open a new position, and then the next market trading day it's down over the weekend. But of course, it's recovered since then. It's been on a phenomenal run. And I saw someone tweet, and I'm just going to take what they say as gospel, which is always a bit of a risk, but they reckon, give or take, we're about 12.5% to the upside away from Nvidia becoming the first ever $5 trillion company, which is remarkable, isn't it? And then you mentioned, bigger market cap than the FTSE, the ASX 200, and what you said is massively key. That whether you own Nvidia or not, your portfolio is going to be impacted by this. I just don't really see a way where you can have a portfolio, of a decent size of different assets where it's not going to move overnight. So, yeah, right. Let's get into the earnings then. What are we looking at? What are we focusing on? And what's the market expecting?
Yeah, we'll get into those numbers first. Market expects earnings of just over $1, 48%
Mm-hmm.
growth year over year. Revenue of $46 billion, 54% year over year. So slightly lower growth than maybe the triple digits that we've come used to from Nvidia over the years. Look, I think bottom line is that what we've heard so far from the sort of the mega caps, ramped up capex on AI after what was another solid set of results, let's go to say. Much of that investment is set to flow straight through to Nvidia. I think I read a stat the other day, 40 to 50% of Nvidia's revenue is coming from those big names: Microsoft, Alphabet, Amazon, Meta. So that bodes well, I think, for this week's earnings. Of course, you come to expect that the market adjusts those expectations when we hear those things coming from big tech. But it's also good, hopefully, for guidance as well, into the quarters ahead. That is a big part of where the market focuses now, is on what we hear from Nvidia, because if they're saying that chip demand is high and AI demand is high, well, then we listen to them because they're the best in the business, right? They're the biggest company in the world. So if they say it, then the AI trade is in full swing. If they say anything different to that, then that's sort of why and where we see, that portfolio, even if you don't own it, becoming impacted, right? Because of its weight it has on the S&P 500. If its stock drops by 10%, we're going to see a big move from the S&P 500 either way. But as we said, it's in this sort of highly enviable position. It's the go-to name, right? And that's not likely to change anytime soon. So yes, you've got AMD, yes, you've got Broadcom and a few of these other names that are coming through, but really it's still the best in the business. And that's why when we talk about the capex coming from those mega cap names, it's going on the doorstep of Nvidia. Look, it's got that sort of slightly maybe premium valuation, not extortionate. Let's be very clear on that. I think it trades about 34 times forward earnings. But investors are willing to sort of continue to pay up on this expectation that they will keep delivering on AI growth. Look, I think they delivered that last quarter in May, sort of really solidified its position, continued growth. Margins most businesses would envy, and a war chest that gives you that firepower to sort of keep innovating and bringing new chips to the table, as they did with Blackwell. Look, we had a few bumps in the road, US tariffs, of course, issues with the Chinese government, and they've also had, recent news has sort of stated that short-term halt on its H20 chips, which are the chips they essentially ship to sort of China. that will cause a little bit of uncertainty. China is a region that has been, the sort of the black sheep, if you like, for Nvidia this year, one that hasn't really delivered. We thought that this would be the quarter where we maybe saw that coming back to the fold again, when we thought we would see revenue starting to pick up, but that sort of chip halt, we're going to want to hear a bit more about it, right? We're going to want to hear about what Jensen Huang is saying about China. Look, I'd still expect demand from sort of those, mega cap names, the hyperscalers, and the adoption of its Blackwell chips to sort of offset that weakness that we are seeing in China. But it's still a bit of a worry. Margins, they're going to be heavily in focus. They've sort of fallen a little bit due to the sort of the ramp up of the Blackwell build out. Again, as you say, if you're innovating and you're building out, it's going to cost you a bit of money, and that has happened, and that's affected margins a little bit. But yeah, look, I think adoption growing, margins are set to rise again. But as I say, when you're bringing those next gen sort of chips through, it's gonna trim your margins a little bit. So that's something I'll be watching closely. But bottom line, look, I think it's a stock that is ultimately priced to perfection. We expect it to deliver, meaning that even that sort of smallest disappointment could really see sort of big volatility across broader markets, not just Nvidia shares, as we said. But I mentioned a moment ago, very, very unlikely we're going to see shares below $100 again. And I think that if we do see any weakness, it'll be bought. I think it'll be seen as an opportunity, given that it feels like this AI boom is just sort of really getting started. So yeah, look, huge result, from Nvidia. And it's sort of that expectation. We expect them to deliver. They've done it so many times, whether that's on, the numbers on the actual day or its guidance. The market may dial in on the smallest sort of piece, but that's what happens when you're the biggest company in the world and the most important stock on the planet, as some have called it.
Yeah, well, I'd agree with that. And the only way we trade below that 100, I guess, is if they stock split it up again. Really, isn't it? Been relentless. I agree with the point about weakness being brought up, and I actually wanted to bring in something I saw from someone just on the seasonality. I mean, most people will know that listen to this or don't listen to this, but for the first time do, that September historically is a pretty poor month in the stock market. And there's been a couple of instances where this earnings that you get in August for Nvidia has led to a bit of a move lower. And I also think where you're priced for perfection, even if it's really good, it's not perfection. The market can sell off a little bit. And selfishly, I'm sitting here saying, give me a dip. I really wouldn't mind that, actually. And if it sort of correlates with that seasonality and you buy lower down for an end of year rally, that kind of fits the way the market works. And so from a seasonality point of view in 2020, going back, what's that, 5 years, you had sort of a massive summer run and it dropped then 10-15%. 1 year later, 2021, you had a sort of a very bullish year in markets. Everyone can sort of remember that, but September and October for Nvidia was poor. And then 23 and 2024, both years, you had drops in September. It wouldn't be the strangest thing in the world. Just because it's happened before doesn't guarantee it happens again. But it is something to bear in mind there. And of course, when you look at Nvidia, you look at the equity markets as well. So that would be quite telling how the NASDAQ trades overnight and tomorrow as well. And for people that, are looking at this, remember, you don't have to get involved straight away. I mean, UK time, it's, I think, 9:20 p.m. or 20 minutes after the US market closes for wherever you are in the world. You don't have to make a decision in that 1 minute, 2 minute, 3 minute after. You can almost say to yourself, I'm going to go to sleep, wake up and see where things are trading. So, don't feel like you have to get involved straight away on this. But as you said, it's the most important stock in the world. It's the biggest earnings release of this quarter, and it just so happens to be the last big name of the quarter as well.
Yeah, it's the one we look to, isn't it? Now at the end of the end of the season, if you like, the end of earnings season. And it's a good point, right, in terms of just sort of maybe sitting back and just sort of letting the result sort of play out, because we do generally see, earnings can sort of unfold over a longer time horizon rather than just sort of that instant reaction. Have you got anything for us on how it sort of reacted, over the days following earnings?
Yeah. I actually tweeted this out. I think it was yesterday, maybe day before. Anyway, the 7-day price reaction from earnings. And for anyone that wants to check them all individually out, just head to Twitter, and maybe I'll put the link in the bio of this podcast. But it it almost looks like a coin toss, is what I would say, whether it's positive or negative. For reference, the reaction in May, 7 days later, it was up 3%. After that earnings, but the three previous to that were all negative, down 12%, down 5%, down 19%, and then before that up 14, up 13, down 7, up 8. It kind of feels like a coin toss whether it's going to be good or bad. I feel like that indecision and the way we rallied into this means it's got to be unbelievable for us to be higher in 7 days' time. But also, if it isn't unbelievable and it's just really good, and you do get that dip, identify some interesting support areas, or maybe it is just waiting for poor seasonality September month and looking to maybe get in and on those dips. I'm just gonna have a quick look at the chart now. I mean, we're trading at 182 on the close last night, and I imagine there will be some people eyeing up 152, which is the previous double top from November last year and December last year. For us to trade down to there, by the way, that's a 16% move. It may well not drop down to 16% to give you that dip, but I think if it was to go down to that area, it'd be something where you just sort of say to yourself, I'm going to close my eyes and buy here, because what an opportunity that would be. So not saying it's going to happen, but if we do have a good release, we drop down, down to 150s, I think quite a lot of people would be interested in that, Josh.
Yeah. And I think as well, we talk about earlier about that sort of weight that it has on the index and that sort of size of the movements we've seen there, right? 6%, 20%, 14% even before that. That's massive, right? So I think given that it holds that sort of massive weighting, right? Do we think it's a bad thing for the market, given that if we see one of those outsized moves, as I said earlier, you're going to move the S&P 500, right?
Yeah, I have to say I don't know. I don't know whether it's a bad thing, if it's a good thing. I feel like it just is what it is. I mean, you get a lot of sensationalism with things like this. Oh, this is unhealthy for the market. It can't go on, and whatever. I mean, Apple was 7% in 2023. The market has gone higher since then, and everything seemed fine. Microsoft, back in the .com, okay, admittedly didn't get above 4%. So we are at record levels, but I think it's just a sign of how good the company has been, how the focus is on AI, semiconductors. But for sure, I guess for those that want to be ultra diversified, maybe it's not the easiest thing in the world, and how poor or good Nvidia reaction at any time. But let's just say to earnings is really going to influence one's portfolio. I guess down the line, there's some questions. If it just keeps getting bigger and bigger and bigger, imagine it goes to 10% of the S&P 500. I mean, that's, I get it would worry investors, I guess. But if you're a long-term investor and Nvidia keep delivering, and you owned it, you own Nvidia, or you're, in ETFs, Nasdaq, S&P, or whatever, happy days, right? So I feel like there's an argument that someone could sit down here and say, and you feel negative about it, or you just zoom out and say it's helping the market go up, and dips will still be bought if they keep delivering, great. And if they don't, well, other companies' percentages and weightings in the S&P 500 would go up. So I feel like it's one where people can try and spin it negatively, but ultimately what will be, and overall the stock market goes up over time.
Yeah, and I think we it's easy to sit here and say that we love it when it's going up, right? And it has done that, for the last 3 or 4 years. So I think that's the key thing. But also at the other side of that, if you don't like the weighting, then you've got, equal weighted S&P 500 as well, right? So there is that ETF if you don't like the weight of Nvidia. But for now, why would you not love it? Because it's been, as I said, it's been the heartbeat of the market. It's driven us to where we are sort of today. But I think that then comes back to, right, if it does underperform, does that come into question as well? But it also affects, other companies as well, right? So let's say they underperform on Wednesday. Who else is going to struggle in correlation with that?
Yeah, good question. And you could say the whole risk market, but I imagine the ones that will be, well, certainly the Nasdaq is going to move more than say the S&P 500, but they'll move in tandem. If Nasdaq goes down, the S&P, the Dow Jones will go down, and European equities will come under pressure as well if it's really bad, and across the Asian market and ASX and all of that kind of stuff, they'll struggle too. But you mentioned some companies earlier like AMD, they'll fall in parallel. TSMC and companies like that will struggle. But also you could even see Microsoft, Amazon, Meta, Alphabet, due to their reliance on those sort of GPUs and for their AI infrastructure. So I feel like it'd be quite a highly correlated move to the downside if Nvidia is bad. If it's good, Nvidia is obviously going to be the main, one that benefits from that. So yeah, those equity markets. I also imagine if it is really bad, risk assets like crypto could struggle a little bit as well. Maybe not as much as in recent years. We've seen how resilient Bitcoin has been this year, which I think is quite admirable. But I do think if Nvidia was to drop 10%, Bitcoin would struggle the next day to go up, for example. It may well brush it off a couple of days later, but I think risk markets would struggle. And just going back to talking about the percentage of the S&P 500, 8%. It for anyone that plays fantasy football, it feels like there's a correlation with that, and in having one's portfolio at the moment, it feels like the most expensive fantasy football asset at the moment is Mohamed Salah, who had an incredible year last year, world-class player, and you feel like you kind of have to have it. And I wonder if investors are out there, they may think, okay, Nvidia's gone up so much, it's expensive, blah blah blah, but I feel like I have to have it. And I think it does feel like that for investors at the moment. It's like, okay, you can have the equal weight S&P 500, but if you don't have Nvidia, you're going to struggle to really beat the market. But that said, like people are having a problem or finding a problem with Mo Salah at the moment is if you have all your money there, then your rest of your portfolio or your fantasy football team might not look as good. But Mo Salah delivers, and guess what? Nvidia deliver too, don't they?
Yeah, absolutely. And I think, again, for those that maybe don't play it, they won't really understand the context of it so much. But I think it comes back to trying to be too clever sometimes, right? When you build your team, you're like, do you know what? I'm going to build it without him. But he scored the most goals, he scored the most points every single season. So why sort of, try and break away from that grain? Why try
Don't
and
reinvent the wheel?
Exactly, right? And I think that is such the key part. I think we can overcomplicate investing, as retail investors to try and beat the market, try and be different. I remember when I started years ago, if I would have just bought Amazon, Microsoft, Meta, Alphabet, how good would it be, right? Don't try and reinvent it. Let's focus on these companies that deliver. And I think even if Nvidia's results don't necessarily, light the market, up, right? Let's just say that they, again, we said they're price of perfection. If they aren't perfection, I don't think this is a reason to not love Nvidia, because I still think that AI, revolution is still fully underway and it's still in full swing. And I don't think that changes anything with maybe just one, maybe mishap in its earnings.
Yeah, I mean, and listen, I think you make another great point, which is very common on this podcast. But about those companies, when I first got into investing, if only I'd held these massive companies, and they were massive companies at the time. And also think how many periods, right, Josh, in the last, let's just say 10 years, decade, where these big companies have had earnings that haven't quite delivered to those market expectations, and they dropped 10, 15, 20%, but they're hundreds of percents higher since then. So if you're a long-term investor listening to this and Nvidia does drop, does that make Nvidia, they're not going to be a finished company here. This is something where you think, okay, if I'm a long-term investor and it drops 15, 20%, oh, wow, what a potential opportunity. Obviously we have to wait to see the actual release, and there could be XYZ reason why it has moved lower more, but great company. This quarter might not be absolutely perfect and it drops lower, but it doesn't change the fact that it's just been an incredible asset to hold in one's portfolio. And listen, it's the one we've been waiting for. It's the one we've talked about for weeks on end. The market's trading near all-time highs. Let's be real. We're heading into a bit of seasonality, which isn't great for the market. You look back at the last few years from Nvidia, it hasn't been great in and around this period. Maybe that's a great thing for investors out there to give you that opportunity to buy lower down into the back end of the year. So I think it's glass half full regardless, Josh.
Yeah, no, I think so too. And, you know, it's going to sort of really set the tone, I think, for markets for the rest of the year. To be honest, we obviously had that Jackson Hole lift that boosted markets, that expectation of rate cuts. You know, now there's that question mark: is have they left it too late? That comes back into play again. But one thing to note on that as well, though, is that we just had a print, an inflation print in Australia today. Headline inflation at 2.8% from 2.1%. The expectation was 2.2. So sticky inflation is still there, right? That is obviously in Australia. That's not necessarily in the US. There's a few bits that
The
go
UK
into
it
that.
is as well.
Right. So, you know, I think that is the key part here is, okay, let's not get over excited that we're going to get lots of cuts coming through, because I just don't think we are. And if Nvidia does step up and it does give them reason for the market to sort of sell off, and we continue to sort of maybe hear, you know, again, we've got that question mark over Trump and the Fed and those types of things as well. So, look, I think it's really going to set the scene. It really is. We are in, you know, the back end of the year now, really, right? We've only got a couple of months left. So it will set the tone, I think, for the last, you know, 3 months of the year.
Bring it on. Josh, as always, thank you very much for joining. And if you've made it this far in the podcast, why haven't you liked it? That's what I want to say. But Josh, as always, thank you very much, mate.
Thanks, guys. See you all next week.